welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena. Shifting focus to the primary markets, then now Gen Resource Recycling has planned an IPO worth 1,250 crore rupees. This IPO will open for subscription on September 24th, and we caught up with the management of the company to understand their fund utilization plans and the growth roadmap going ahead. Let's listen into a slice of that conversation.
Our major import is our purchase is from the imports side, and we also buy domestically. Domestically improving a lot. Now the government push for recycling is very big, and we are now sourcing for domestic scrap also is going up, and we assume that it will go to higher level as the country is growing in a very robust way. So this scrap will come more and it's getting more organized because of the regulations, rules of government also.
Mike, 50 crores in OFS and 500 crores in primary issue. What are you going to use the primary issue for?
So the primary issue basically would be used for repayment of the loans. Out of 500 crores, majority is going to be used in that, and some portion will be used for general purpose businesses.
What is the total debt that you have in your books?
Total debt would stand at somewhere around 900 crores at present.
And you will use what, say, 350 odd crores, 375 crores?
375 or something like that, yes.
Does this business require a lot of working capital? Kamlesh?
Yeah, it's a little capital intensive industry because of the we buy from globally, and we have to make payment on loading the material. The shipment schedule take time. Some countries like 30 days, some countries take in 45 days, something 60 days also. So capital get blocked in while shipping, but once it comes, it's very fast, and around I think 38 days we are able to rotate the money from factory to the buyer's payment. So the majority money get blocked while shipping during the shipment time.
And how do you do that sourcing of your material? I mean, which are the countries from where you source normally?
So we source globally around I think 120 plus countries, and this sourcing happen round the clock, different time zone, and different executive we have to source, talk to suppliers, and we have regular suppliers who scrap yards, traders keep giving to us.
And when you refine the metal to, refine metal alloys and ingots, which you do actually for lead, copper and aluminium, do you sell them globally or is it sold in the domestic market?
No, we do both exports and we sell locally also. So we export to main market for us. Copper is for mainly China and Korea, and lead is for Korea, and sometimes Japan also. And our aluminium goes to Japan, and domestically we sell to a lot of industries of copper and battery manufacturing and automobile casting of aluminium. We supply locally also, but major sale is of course exports.
Kamlesh, how do you manage this forex fluctuation? Is it a natural hedge for you, or there is a, by the time you order and by the time it comes and the payments have to be made, how do you manage that forex translation which comes in? Because it could be volatile in that.
Yeah. So as you could understand, a large chunk of import right now is from imports, and we also do exports. So to a large extent, to the extent we are exporting, we have natural hedge. Having said that, we have unhedged exposure of the purchase, which we have a very strong hedging mechanism and operation. We hedge by buying and selling forwards.
Give me a sense of, are the supplies which you have from 100 odd countries, which you said, do you have long-term relationship or agreements with them for supply of these materials which you need to recycle?
Yes, so certain supplies we have some 3 months contracts, sometime long-term also. So, but mostly are spot contract because of the scrap getting generated there and there. So there are global tenders, there are global domestic supplies, there are demolition happening globally for the plants and housing complexes. So it's keep coming, and the scrapyards they keep selling to us on spot market, and some are the long term also we have.
Relationship and contract tenure.
Yes.
So in this business, relationship matters a lot. So there are suppliers with whom we have relationship for decades, Uh, Contracts are generally spot contracts or short term, maybe 2 months, 3 months. But if you have long term relationship, the business continues.
What is the normally recovery rates from these scraps that you?
So it is not uniform, sir. It depends on spec of the material. A different cable has got different copper content, and different batteries has got different type of lead content. So the suppliers give the spec. The contract specs matter. Based on the specification of the raw material, we buy and give the price to them. So it is not uniform because it's scrap. So how can be uniform?
So give me an idea of the kind of refining capacity that you have now for various metals, whether it's copper, lead, or aluminum.
So we have a total capacity of more than 300,000 tons annually for aluminium, copper and lead put together. In this, of course, the lead constitutes the highest capacity, followed by copper and then aluminium.
And is there a plan to expand that capacity?
Of course. So we are expanding in various the strategies we have. So we are going for expansion of this present capacities what we are manufacturing, and we also have planned to do the value addition product. So we are going for this copper cathodes and wire rods and copper flats production, and the present capacity also is getting increased.
What is the kind of capex for that actually, and how are you funding it? Because your current fundraise is for retiring some of the debt.
So we right now we are working on value addition project for the copper, in which we are making the high value added products of copper. So after we complete this project, there are more projects under study and in offing. In fact, the company has been profitable year on year. There are good internal accruals, which are enough to take care of the expansion projects.
All right, moving on then from the primary market action to stocks that are in focus today. For that, we are joined by Aditya Agarwala, Head of Research and Investments, Invest for Edu Private Limited, who's joining us on the technicals. And from our research team, we are joined by Rabinder. Hi, good afternoon to both of you. Thank you so much for taking the time out and joining us. Let's get going with all the stocks that are in focus today. Coming to you first, Aditya. Your first stock that you picked out for us is Bajaj Auto. Now, Bajaj Auto today, it's up almost 2%. And besides the GST rate benefits that they are passing on, they have also given some extra benefits for the festive season as well. On the back of that, we do see the stock buzzing, but that's the fundamental part of it. On the technicals, what do you see and what are the levels to watch out for?
Hi, good afternoon, Ankita. Thanks for the show. So it's a good up move that we're witnessing in trade today, backed by healthy volumes as well. So overall, looks like it's a move that is going to continue in the coming trading sessions as well. And if you take a look at the overall chart structure of Bajaj Auto over a longer period of time, you will notice that after a very long consolidation, stock eventually had broken out of a cup and handle pattern. And post breakout, stock had witnessed a sharp up move, and after that we witnessed a narrow consolidation phase on shallow volumes. And what we're witnessing in trade today is again a resumption of an up move on very strong volume. So that tells me that the up move has resumed again and is likely to extend in the coming trading sessions. On the upside, stock can easily test levels of 9,800 to about 9,000, 8,900 to about 9,000, 8,900 to about 10,000 on the upside. Give it at least a few trading sessions and you will see that kind of an up move, more of a positional bet that it is looking strong. On the downside, 8,900 is a strong support area for the stock. So overall, I think offers an excellent risk to reward with a stop loss just below 9,000. One should look for a target of 9,800 to 10,000. Indicators are also showing strength in the stock. So definitely it's a big up move that I'm seeing in the two-wheeler space.
All right, so that's the view on Bajaj Auto. Those are levels to track. But moving on, Rabinder, coming to you, Swiggy is the stock that you've picked out for us. It's down nearly 2% right now. I believe a brokerage report with a downgrade coming in.
Well, yes, Swiggy is in focus on the back of the brokerage downgrade, where JM Financial has come out with a note and they have downgraded the stock to reduce rating from the hold rating and cut target price to, and they have revised the target price to 440. They say that the Swiggy balance sheet remain a cause of concerns and requires remedial measures. And in their view, while media reports suggest that the company is considering a sale of their approximately 12% stake in Rapido to recapitalize recapitalize its balance sheet. They believe, GM Financial believes that it's need to a much bigger war chest, and they have reiterated that Swiggy needs some much larger funds of USD 500 million to support its long-term ambitions in quick commerce. And till the hangover is lifted. GM Financial expect the Rapido transaction to go through in second half of FY26, and therefore factored in the proceeds from the scale of stake sales at the upper end of the range discussed in the media report. So back of this, Swiggy is in focus, and the stock is down approx 2%.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you more buzzes on the other side. Stay tuned. Market Fatafat, where we're getting you all the buzzers and stocks and news. Well, let me come to you, Aditya. You picked out a DLF for us. Tell us, what does DLF look like to you on the charts? If you look at DLF, it hasn't done much. I mean, it has been in a range for the past few weeks. From here on, what are the levels to watch out for?
Though it's been a range, Ankita, but if you take a look at the overall chart setup, it's been making higher highs, higher lows, and right now it's on the verge of a breakout from a narrow consolidation phase. My sense is in the coming trading sessions, you will see an eventual breakout from that hurdle of 800 odd levels. And once it breaks out of that 800 odd level, you're going to see much higher levels in the stock, maybe can test levels of 830 as well. And once it takes up 830, 860 is the next target. So for a target of 830, 860, these are two targets that I'm playing with. On the downside, stock has good support around 770, 765 zone. So the risk to reward is also in favor of going long at current levels. And plus, if you plot few moving averages, I see a positive crossover on that, and RSI has also moved into the bull territory. So overall, the chart setup is suggesting that a fresh leg of buying could come into the real estate space, and DLF could be the one stock to watch out for in this space for a target of 830, 860 in the near term.
All right, so fresh leg of buying could come in the real estate space, and DLF is one to watch out for. That's the word coming from Aditya. But putting the spotlight on the IT space now. Now, the IT stocks, they're all in focus today and under pressure after the US government announced a $100,000 H-1B visa fee. That's sparking initial panic across the Indian sector. However, the White House later clarified that it is a one-time charge. Only new petitions will be charged that, and with the existing visa holders and renewals exempt on that charge. Now, brokerages say that the Indian IT remains most exposed to this move, as a majority of H-1B visas go to Indian nationals. In fact, Nomura has come out with a report, and it notes that the fee could hit the sector EBIT margins by 11 to 99 basis points and EPS by half to 6%. That's depending on the company's exposure though the industry is already shifting, reducing visa dependence. So that's the word coming from the brokerage. In fact, Nomura maintains a buy rating on Infosys and Coforge, saying that the long-term growth story that remains intact despite the near-term cost headwinds that the sector is seeing. However, the entire sector is facing a lot of pressure today. All stocks trading in the red in the Nifty IT pack.
All right, the entire IT pack is in focus on the back of that H-1B visa issue that's going on. But with that, Aditya and Rapinder, thank you so much for taking the time out and joining us. That was the last talk of the market Fatafat. But let's put the spotlight on the primary market. Another IPO that is set to hit the bourses, EPA Prefab Technologies, that's worth 504 crores. That IPO will be opening for subscription on the 24th of September. And we caught up with the management to understand their fund utilization plans and the profitability outlook. Let's go across and listen into this slice of that conversation.
Started as a packaging company, and the kind of packaging which we do is called EPS, expandable polystyrene. It has basically two applications. One is on the packaging side and the other is on the insulation. So the insulation products which we made are used for cold chain solutions, in insulating the cold chain solution walls and the floors and the roof. And there was a time in the year 2008 when the market was moving towards the negative temperature cold storages. And that was the time we realized that the product EPS was not suitable to cater to the negative temperature cold storage, cold chain requirements. And then we started getting into polyurethane sandwich panels, which are called as puff panels. So we started as a puff panel manufacturing, and then eventually we got into smaller modular housing. We developed certain products for the modular housing, rapid housing, and then eventually we got into the bigger building space in the year 2017 and 18 by setting up our first prefab plant in Greater Noida.
Nikhil, give us a sense of the 300 crores that you are raising from this issue is in primary. So, what is it going to be used for?
Yeah, so it will be going in 3 baskets. One is we are doing a capex. We are putting sandwich panel line in the north in Gelot. Around 100 odd crores will go there. Then we are expanding our capacity for pre-engineered building fabrication in the south in Mambatu plant. So part of it, around 60 crores will go there. And then we are also repaying our debt of around 70 crores. So majorly these are the portions. Apart from this, there is GCP, General Purpose Corporate Fund, that is 25% of the balance. That we'll be using for further, requirements of the company.
What is the current leverage on the books, debt on the books as we speak?
The debt right now, or as on 1st of April 25, net debt was around 53 crores. So we also, while the total debt was around 210 crores, including the term loan and the working capital limits, but at the same time we had a FD of around 151 crores or 155 crores. So the net debt was around 53 to 55 crores.
Give me a sense also of your order book. You are into prefabrication structures, and it's linked to and it's very closely linked to capex cycles in expansion of manufacturing units and other areas. So, what is the kind of order book that you have, and is there a particular sector which you have got more orders from?
That's a great question. In our business, order books give a clear visibility for the next 6 to 8 months. And for us, as we speak, the order book for APAC prefab right now is around 1140 crores. And most of the, we categorize the order book into three areas. One is on the manufacturing. So when we make new factories, then on the manufacturing side, typically it is around 60 to 65% of the order book for us. Then it is the warehousing, which is around 25 to 30%, and then around 7 to 8% is coming from the high-rise buildings. So as we speak, the factories, we are getting more and more orders for factories these days because of the ongoing capex cycle in the country, and most of the orders. We are sector agnostic, but still most of the sectors, which are contributing immensely to our order book right now is renewable and FMCG and I would say auto.
Interesting that you mentioned all these sectors, and these sectors are growing in terms of expansion, which is happening to respective industries. Give me also a sense of how your, the packaging business is doing. It's 15% of your top line. How is it doing in terms of profitability? And, do you plan to continue with that packaging business, given that it's now a small portion of the entire book for you?
See, there's a lot of emotional value to the packaging business because in the year 2000 we started with that. The plant is in Greater Noida. We have only one plant for that, and the plant is in Greater Noida, very next to LG Electronics. And the relationship with LG for this company is more than 25 years. So around 40% of the revenue is coming from one single customer there. And the kind of tailwinds which we see right now in the prefab business, as a management, we have decided to focus on prefab business for now. And the packaging business will continue to grow at a steady pace of 6 to 8%, depending on the growth of its major customer.
Can you also give us a sense of the kind of timeline or turnaround time that you have normally for your order book? What is the normal turnaround time for this order book, which you mentioned that it's over 1,000 odd crores? Nikhil?
Yes, so generally, the project size that we take on an average takes around 5 to 7 months from designing to manufacturing to execution at site. So there are smaller projects which gets done in around 4 months, 4.5 months, 5 months, and there are some bigger projects which are taking around 6 to 7 months. So generally, typically our order book is 7 to 8 months, which we have and we execute in the coming 7 to 8 months.